So why is Bitcoin lagging? It's lagging because the vol is low. But here's the beautiful thing. This is how the Bitcoin coiled spring happens. Because it's lagging gold to where I think we all expect it to go higher, and pari passu, the price should be closer to 170K or so, it'll happen very fast. This is the kind of stuff that Bitcoin does. When there's such a gap in where it should be priced relative to other assets, it moves really quickly. And that then becomes a self-fulfilling volatility machine that can actually fuel further acceleration into adoption. Because really, people tend to buy Bitcoin on the way up. I think really this quarter coming for the end of the year is one of the best setup for Bitcoin we can ever have.
From stability to surge, Bitcoin's path beyond $200,000. Bitcoin is trading above $115,000 after reclaiming the 50-day EMA, with market sentiment strengthening on the back of renewed institutional flows. Jeff Park, partner and chief investing officer of ProCap BTC, highlights that both gold and Bitcoin maintain the strongest correlation to M2 money supply, a key factor in how investors assess their performance. Yet, despite this alignment, Bitcoin has underperformed gold in recent months, a dynamic Park attributes to unusually low volatility. He notes that Bitcoin's appeal has always extended beyond its store of value narrative to the speed and intensity of its price moves. In 2025, however, there were stretches where gold's 10-day realized volatility surpassed Bitcoin's, a development Park calls the worst possible scenario for the crypto asset. Paradoxically, Park views this calm as the ideal setup, describing Bitcoin's current state as a coil spring, preparing for explosive momentum. With Trump's economic agenda producing the rare combination of a weaker dollar and lower yields, conditions are highly supportive for both gold and Bitcoin. Park argues Bitcoin should already be priced between $150,000 and $170,000, with structural buying from corporate treasuries potentially driving it past $200,000. Importantly, Bitcoin's historic volatility gap to gold underscores growing market stability, helping attract more than $220 billion in crypto inflows this year. This is just the early stage of crypto's evolution. The most transformative shifts are still ahead. Stay connected, subscribe, and turn on notifications to follow every major move in Bitcoin, Ethereum, and the broader future of global finance.
Yeah, both gold and Bitcoin have shown to have the highest correlation to M2 supply. And because of that, that tends to be the factor in which how people grade their performance. And I think it's not hidden to folks that those two are still today the highest performing assets year to date. So I think that's good. The question of Bitcoin's specific underperformance to gold, in my opinion, has a lot to do more with the lack of volatility. Because I think the aspect of why Bitcoin is favored upon gold at times is not just the store value narrative, which is important, but it's also the velocity in which the price moves that provides a lot of attention and excitement to the mainstream adoption of the asset in itself. And so some time ago, I tweeted that the worst thing that could happen to Bitcoin this year would be if gold's volatility goes higher than Bitcoin's volatility. It feels a little unimaginable, but there were windows in which that happened because of the extreme moves that gold experienced day by day, where gold's 10-day realized volatility actually superseded Bitcoin's. And I thought, wow, this is actually the worst thing that could happen because people still ultimately want return. The reason young people gravitate towards Bitcoin really at the end of the day, I think beyond the narrative of its ideology is its volatility. They like the idea of owning volatile assets. And if gold's actually going to be more volatile, hey, gold has an ideology too that I think young people can also wrap their head around and appreciate if they felt that there was a buy-in for it. And so the number one thing that matters is Bitcoin's volatility has to rise. And so I think right now, this is really the best setup for Bitcoin ever. I posted back in February this year, my big 2025 macro thesis, which was if Trump is able to accomplish all of his macroeconomic agenda, the end game would be achieving the holy grail of fiat alchemy, which is lower dollar and lower yield, which historically is not possible because of the Triffin dilemma. Many, many pundits said this isn't going to happen and Trump's not going to get his way. And I said, never, ever doubt the ability of a transparently profit-motivated person who's in power, who's going to accomplish these things. And lo and behold, the DXY has come down from 120 to now below 95. The 10-year upon Trump's start in January was at 4.6. Now it's at 4.0. It's happened. And this is incredible acceleration for Bitcoin. And it is incredible acceleration for gold as well, which is why gold has done so well. So why is Bitcoin lagging? It's lagging because the vol is low. But here's the beautiful thing. This is how the Bitcoin coiled spring happens. Because it's lagging gold to where I think we all expect it to go higher, and pari passu, the price should be closer to 170K or so, it'll happen very fast. This is the kind of stuff that Bitcoin does. When there's such a gap in where it should be priced relative to other assets, it moves really quickly. And that then becomes a self-fulfilling volatility machine that can actually fuel further acceleration into adoption. Because really, people tend to buy Bitcoin on the way up. This is the thing that you and I know.
It's got a reflexive nature to it.
Cycles and exactly. It's so reflexive. It is not worth the risk of holding on to it if you're constantly worried about downside and it's not performing. But when it goes up and Bitcoin has high correlation to itself, which is in itself the reflexive wheel of autocorrelation, people jump in. So I think really this quarter coming for the end of the year is one of the best setup for Bitcoin we can ever have. I think that it can move really fast. We could have series of days where it's moving 5K a day, and it will just feel kind of really exuberant, but it won't be so crazy that people don't think there's an opportunity to buy into it, right? It's actually, Bitcoin is truly an asset that you try to buy high and sell higher than try to buy low and sell high. The distinction here I'm making is that Bitcoin is generally really boring and generally goes down when people aren't focused on it. But when it goes up, the trend has a long lasting effect, more so than people think. So in the first, second innings of the run up, it's never late. It will keep going. So I think the price target most people have in mind is it should really be right now around 150 to 170K, just based upon what we're seeing in its relative underperformance to gold. And I think if you were to think there was going to be more buying coming from a structural perspective with these treasury companies that have cash waiting to participate in the market for, that's an inelastic price bid that could push it up to 200K plus. I believe at Bitwise, our price target we had since the beginning of the year was that it could hit 200K. And I do think, even though it feels kind of far from where we are, it's very much in play that this could happen by the end of the year.
From retail to ETFs, why this Bitcoin cycle is different. Bitcoin is now trading close to $100,000, with its market capitalization nearing $2 trillion, cementing its position as one of the most significant assets in global finance. Jeff Park notes that Bitcoin's historical price floors have been shaped by the cost basis of new capital entering each cycle. In past years, inflows were largely driven by retail traders and agile family offices, but lacked long-term institutional presence. This cycle is different as ETFs and institutional allocations are bringing in sticky capital. Park explains that financial advisors allocating just 1 to 5% of portfolios to Bitcoin are unlikely to sell during market downturns, creating stability and reducing the likelihood of steep historical drawdowns. Park also underscores Bitcoin's seasonality, pointing out that Q4 and Q1 have consistently been the strongest periods for the asset. Traditional drivers like halving events and mining profitability appear less influential today, with Bitcoin increasingly trading alongside global macro risk assets. This evolution reflects Bitcoin's graduation into mainstream institutional portfolios. Park further observes the ongoing debate over Bitcoin and gold, whether they are substitutes or complementary. He suggests that if gold investors begin to embrace Bitcoin as a portfolio complement, it could mark a key inflection point for broader adoption and accelerate Bitcoin's role as digital gold for the modern era. Let's get back to the interview.
I think historically, the way Bitcoin has found new floors had to do with the cost basis of the new capital coming in every cycle. And so historically, what we haven't had great data for is that there weren't many permanent capital vehicles or permanent capital investor types coming into the Bitcoin space. So every cycle, yes, you were getting new people in, but the new people tended to be still retail or sometimes more fast moving kind of family offices. And it never really dawned upon endowments or sovereigns or ETFs. And I think the unique aspect here of the run-up is if that comes from permanent capital bases and ETFs where people are buying crypto for the very first time, they're generally not sellers because a 1 to 5% allocation you're making into a fund will neither make or break you. And so you're not really incentivized for profit taking until there is actually a more meaningful ROI on that. And that's why I think it's important to watch the ETF flows, because if the Bitcoin price move happens with ETF flows, and these ETF flows are driven by RIAs and financial advisors that are making foray into Bitcoin for the first time into someone's portfolio, that is money good. That will stay. Even if there was a 40% drawdown, they're not really selling because it wasn't a position sized for them to feel hurt by it. And that's why Bitcoin, I think, is always going up in cycles, because people don't sell, but then they buy on a lower cost average because they want to build their position, and then they are able to participate on the upside. And so because this particular cycle is so much of new capital coming in, I think that it is quite unlikely we're going to have the kinds of drawdowns historically that we've experienced. I do think there are self-fulfilling seasonalities in all markets, and it's not escaped all Bitcoin investors that generally Q4, Q1 are the strongest always. And it's proven like to be the case most of Bitcoin's history. And that in itself has some self-fulfilling effects to it. At the same time, the historical things that used to matter, like the halving or, you know, how much actual mining profitability there are, I think are becoming maybe less scrutinized as it used to be in the past as the driver of marginal price action. I think it was this week that the Bitcoin network hit 1 zettahash, which is in itself like a pretty incredible output. But I haven't heard people talk about it because it's not really in their considerations anymore about that meaning anything about kind of difficulty for compute and miner profitability. So I think some of the seasonality, more likely if there were ones to come, would probably be just tied to macro risk on risk off assets and how people are pair trading Bitcoin with other global macro risk assets. Because that's kind of, I think, the pros and cons of the trade-off of graduating Bitcoin into the adults in the room, which it's now a part of a broader portfolio. How does it play with other assets? Yeah. And I always think about whether gold and Bitcoin are complementary or actually substitute goods. This is like an open question for me still, because I meet a lot of investors who are really into Bitcoin, but they also like gold. But you don't see a lot of gold investors who like Bitcoin. It doesn't percolate the other way around the same way.
It's true.
But that has some impact for kind of the price and path dependency of like how their price action might relate to each other, right? So if gold goes up and Bitcoin's price action versus Bitcoin goes up and gold's price action depends a little bit on that sentiment there. So I think that's the other thing that could change in cycles where gold investors will accept Bitcoin more as a complementary good and is now a part of the portfolio and not necessarily a substitute trade-off. And that could in itself be like a pretty meaningful inflection point for more adoption across these cycle curves.
Bitcoin's rise into six-figure territory signals a turning point for the digital asset, underscoring its evolution from a speculative trade to a central pillar in modern investment portfolios. Institutional inflows through ETFs and long-term allocations are building a stronger foundation, reducing the likelihood of deep drawdowns that once defined past cycles. Seasonal momentum, combined with supportive macro forces like a weaker dollar and lower yields, adds further fuel to its trajectory. Beyond the numbers, the debate over Bitcoin and gold continues to shape sentiment, yet growing acceptance of Bitcoin as a complementary store of value positions it firmly as digital gold for the future of finance. Is Bitcoin on the verge of replacing gold as the ultimate store of value, or will it become a powerful complement in diversified portfolios? Crypto is reshaping the future of global finance, but in a market crowded with noise, only disciplined investors who focus on fundamentals will thrive. Stay tuned and remember to like, share, and subscribe for more high-impact insights into the world of digital assets.